The Chinese yuan is facing a challenging period marked by significant economic pressures. It has weakened considerably against the US dollar over the past year. This is despite numerous efforts by the Chinese government to support and stabilize it. Increased spending and debt issuance have not been enough to bolster confidence. Investor sentiment remains low. This has resulted in a persistently weaker yuan, affecting various sectors. The People's Bank of China, or PBOC, is actively trying to stabilize the situation through various measures. They're setting a stronger midpoint rate for the yuan to curb its decline. However, Chinese bond yields tell a different story, reflecting deeper issues. They have dropped to record lows, indicating broader economic concerns. This indicates a lack of faith in the future of the Chinese economy among investors. The weakening yuan has significant implications for global markets. It affects global markets and investor behavior, leading to cautious strategies. Understanding the reasons behind this decline is crucial for stakeholders. This knowledge empowers investors to make informed decisions and navigate the complexities of the market. Unveiling the underlying factors behind the yuan's weakening. Several factors contribute to the yuan's decline, making it a complex issue. One major factor is the widening gap between US and Chinese interest rates, which has significant implications. This difference makes the US dollar more attractive to investors, drawing capital away from China. Consequently, it leads to capital outflows from China, as investors seek better returns elsewhere. Money flows from yuan-denominated assets to US dollar assets, further weakening the yuan. Another significant factor is the decline in investor confidence, which cannot be overlooked. Concerns about the Chinese economy are growing, adding to the overall uncertainty. This has triggered capital outflows and a loss of confidence in Chinese assets, exacerbating the situation. The stock market and the yuan are both feeling the pressure from these combined factors. Domestic economic challenges within China are also playing a significant role in this scenario. The property sector is stagnant, consumer spending is weak, and yields are declining, all contributing to the problem. All these factors combined create significant downward pressure on the yuan, making recovery challenging. The yuan's weakness has far-reaching consequences. It impacts global markets and influences investor behavior. A weak yuan makes the US dollar more appealing. Investors seeking stability move their money to the US. This can affect emerging market currencies as well. Investor confidence in the Chinese economy takes a hit. Foreign investors become hesitant. This could hinder the internationalization of the yuan. The goal of making the yuan a major global currency faces setbacks. The situation creates uncertainty in global markets. Understanding the complexities of this situation is essential. It helps investors make informed decisions and manage risks effectively. The future of the yuan is uncertain. There are conflicting forecasts from various experts and institutions. The PBOC aims to improve exchange rate management through strategic interventions and policy adjustments. They want to prevent extreme fluctuations in the exchange rate, ensuring a more stable economic environment. Financial analysts offer differing opinions, reflecting the complexity and unpredictability of the market. Some predict further weakening of the yuan, citing economic pressures and global market trends. Others foresee stabilization or even strengthening, driven by potential policy support and economic recovery. Goldman Sachs, for instance, believes the yuan could weaken further, influenced by external economic factors. From an Islamic finance perspective, risk management is crucial, emphasizing ethical and stable investment practices. Principles of stability and ethical investing guide decision-making, ensuring long-term financial health. Investors must carefully assess the risks associated with the yuan's fluctuations, considering both short-term and long-term impacts. In conclusion, the Chinese yuan's performance reflects a complex interplay of factors. Staying informed and adaptable is vital. Investors need to adapt to changing market conditions, continuously updating their strategies to mitigate risks. Diversification and a long-term perspective are key to navigating this uncertainty, ensuring resilience against market volatility.